Hi, good afternoon. This is Dan Hagstrom with Yellowstone Mortgage, and today I'm going to chat about down payment, percentages of purchase prices, and sources of down payment. So there's a lot of confusions about how much down payment someone needs to buy a home and where they can come up with the money. So the first program we talk about is conventional loans, and traditional conventional loans require a 20% down payment. But if you have less than that, then you can pay mortgage insurance and get into a conventional loan program with less than 20% down. As of now, basically the minimum is 5%. However, there's talk about a 3% down payment program coming back. We had it, more than about a year ago, and then it was canceled by Fannie Mae and Freddie Mac. So we can stay in touch about that possibility, but use 5% down on a conventional loan for now. Next is FHA, which you probably all heard of. Those programs, the minimum down is 3.5%, which is a little better. The disadvantage to FHA, which we can talk about more in depth later, is FHA's mortgage insurance is more expensive than conventional mortgage insurance. And all mortgage insurance is foreclosure insurance in case someone buys a home and they can't make the payments any longer, goes into foreclosure. An insurance policy generally pays to cover the losses that a lender might incur. Next program is VA, which again you've heard of, and if you're a veteran, it's an excellent program. You can do zero down on a VA, and they don't have mortgage insurance. They have what's called a funding fee, but it's still a lot cheaper than FHA's or conventional mortgage insurance costs. So if you're a veteran, we can sure chat about the options and so make sure you have eligibility or you haven't used it up in some other fashion. One side note to VA, if you happen to have been discharged due to a disability, then VA may waive 100% of that funding fee, so the VA program gets to be even a better deal. Last, USDA. It's the same federal department that stamps the meat and all that stuff. They have a rural loan program, which we can do here at Yellowstone Mortgage, and so if you live out of town, you're thinking about buying out, basically east of Brighton, so to speak, most of Weld County, and then out east Strasburg way, USDA considers those targeted areas. You can get into a USDA program with also zero down. So just food for thought there. The next part of the little thing I want to cover is where can I come up with money for down payment? The main thing is people say, well, I've got deposits, big savings, or checking accounts. But also, you can get a gift from a blood relative or a close relative. You can borrow against an asset, which a lot of people don't understand. So if you have a car that's paid off, you could borrow $3,000 against the car. We qualify you with those car loan payments, and that money can be used for down payment. You can also borrow against other personal property, but they have to be assets. It can't be a signature loan like a credit card or something like that. You can borrow or withdraw from your IRA or other retirement accounts like 401ks, and that's an acceptable way to raise money for a down payment. And then don't forget about, besides those retirement accounts, any other assets you might have that you can either withdraw against or borrow against as a way to raise money for down payment. So remember, down payment limitations can prevent people from buying a home, but a lot of times people don't understand, and it may not be as big of a deposit or money amount that you need, and therefore we can sure chat about sources of down payment and how to buy a home now instead of waiting longer. Thanks so very much. Take care.